I received a special award in the field of crypto market analysis. This is, among other things, thanks to you. It's your achievement as well. Besides that, Bitcoin is currently at a very important point, which we will discuss in detail in a moment. Are you curious? Let's get started. Hey there. Welcome to a special episode of Kanga Trends, the crypto market analysis, where we've been meeting for 66 weeks now to analyze Bitcoin, Ethereum, and a selected altcoin. We've been meeting and taking a look at the charts from 3 different perspectives: technical, on-chain, and fire charts. So why is this episode so special? Well, maybe because, or at least partly because, thanks to you, for which I'm truly grateful, I received the Silver Block Award at InvestCuffs, which means second place among the best crypto market analysts in Poland. Really? Thank you so much for that. So it's definitely the culmination of these 66 weeks we've spent together here and of all the knowledge I've shared with you. And it's certainly also the culmination of my 5 years of work on Twitter. If you're not following yet, be sure to start. But let's move on to the analysis. However, before we do that, remember that the content in this material absolutely does not constitute investment advice. For advice, consult a licensed advisor, or just do what I do, conduct your own research. If you're ready for this, if you accept this message, grab your coffee, and let's get to the charts. And there's really a lot happening on the Bitcoin chart. First and foremost, we can see yesterday's candle, which shot up very high, broke through a very important resistance level, basically at $112,000, and even reached $114,000. But be careful, because there it bounced off an important point that we've been pointing out for a long time, the 50-day moving average. That's our red line here, which runs along, and just above it, in correlation, is basically the 100-day moving average, which is the yellow line. We can see a very clear rebound and a deep dive. Attention! This dive, as we know, was driven by certain information that appeared on the market, but let's set that aside for now. We're only reading the chart itself. And notice the $112,000 level, which was supposed to act as a kind of support that could have led to consolidation and a later attempt to break through the moving averages, was not maintained. Instead, we see a very sharp red candle dropping steeply, which additionally reaches the 200-day moving average that for several days now had already been tested as support. We had a breakout here, but on the weekly chart, it was actually defended. We'll get to the weekly chart in a moment because there's also an important point there that's worth mentioning. Nevertheless, we can see that this level is being tested once again, and unfortunately, it poses the risk of further declines. From the perspective of fire charts, which we'll also discuss in a moment, we've mentioned many times that there are a lot of buy orders here, and they could slow down the price drop. Besides that, it's worth remembering that when such red wicks appear, like the ones we saw here on October 17th, these wicks tend to get filled, which is why the price may unfortunately drop even lower, especially when we encounter such a strong rejection as happened here. In addition, we don't see any reversal signal on the TD sequential. Let's also take a look at the RSI. Is there any meaningful signal appearing on the RSI? Well, I don't see any divergence here. We can see that the RSI is moving low. Yesterday's session closed at the level of 40. And here, the space, whether downward or upward, to the resistance at 50 still remains significant. This increase definitely appeared here during the trading day, but since declines followed later, the session closed much, much lower. But what is most important for Bitcoin right now is not these basic moving averages that we are currently observing, but yet another completely different one. One that I return to occasionally because, in my opinion, it serves as the boundary between the bulls and the bears, or more precisely, between a bull market and a bear market, even in the Bitcoin market. This is the 350-day moving average, which we can now see before our eyes. It's this green line. I turned off the 200-day moving average, which was also a green line, and replaced it here with the 350-day one. And note, it is currently at just under $102,000, $101,933 to be exact. And we can see that the rebounds that took place here were already really very close to this area. Historically, from these areas, Bitcoin tended to bounce back. As we can see during this bull run, these rebounds did occur here, but we also know that in previous cycles, it happened that when Bitcoin broke through the 350-day moving average and tested it from below, then continued to decline, we knew we were entering a bear market, and that was a downturn. That's why, in my opinion, this is a very important moment. What happens here will be crucial. I see a strong indication that Bitcoin will bounce off this level. But be careful, we need to watch this moving average very closely, because contrary to appearances, even though it is relatively heavy, it moves very quickly. And I share this kind of weekly chart overview every Monday morning on my Twitter, so I encourage you to follow me and stay up to date with these things, because it presents quite an interesting perspective. Above all, we see a lot of different discrepancies. Here we are dealing with a certain momentum discrepancy between the price and the RSI. And note, this is not a classic divergence, because a classic divergence would span 14 bars, meaning 14 weeks. Here we have a momentum discrepancy, where the price is rising, but the momentum on the RSI is falling. In addition, recently we observed a bearish divergence, in this case a classic one, which unfolded here. Here, the price was rising while the RSI was falling, but then a certain change occurred. Note that Bitcoin dropped to the 50 level on the RSI, which is the boundary between bulls and bears. Let me emphasize once again, this is happening on the weekly time frame. And here we have a divergence, here we have a bullish divergence, which could push the price higher. Additionally, we can also see the 200-day moving average here, which we discussed a moment ago as well, which was breached on the daily time frame, but on the weekly it is still being maintained and leaves room for growth. In my opinion, taking all these aspects into account, considering exactly where the 350-day moving average is currently located, a really strong foundation is being built here for Bitcoin to potentially bounce back strongly at any moment from the boundary of the 350-day moving average or its immediate vicinity. Let's move on to the Bitcoin fire charts and check how the orders are distributed on the largest order books on the biggest cryptocurrency exchanges in the world. Let me remind you once again that the blue line is the Bitcoin price line, while these horizontal lines represent buy volumes if they are below our price and sell volumes if they are above the Bitcoin price. Let's first check what's happening at the bottom, because that's more important at the moment since Bitcoin is simply in a local downtrend. And we can see a multitude of clusters of buy orders, which are really building up significantly and have their total accumulation, with the largest essentially overvaluation around the $100,000 area. And here we have buy volumes of about $35 million in stablecoins, of course. Note, these are proportions. These volumes, taking into account all exchanges, are certainly higher. However, it's worth looking at this chart proportionally and realizing that on many exchanges it may look very similar, and these volumes will accumulate. Additionally, let's note that currently Bitcoin is moving within a rather narrow trading range, which means there is an ongoing defense of the 200-day moving average to prevent Bitcoin from experiencing a larger price drop. However, there are quite clear signals that Bitcoin could indeed fall, and in this case, buying back at lower levels may occur. On the other hand, if we look higher, we see resistance levels that only start at around $115,000, which is higher than where the price actually reached. Yesterday's price. The first sell volumes, let's say, are at 114, but that's only a dozen or so $1 million in Bitcoin waiting to be dumped onto the market. It's only from 115 that larger sell clusters appear, and the next significant ones show up around 120. Apart from that, we currently do not see any available space with sell volumes extending up to the 114 level, so a potential attempt at another strong breakout and perhaps even another price pullback could possibly happen again. And of course, there's also the CVD, and here we can see who's buying, and the buyers are primarily the whales, which is our brown line, wallets with a balance between $1 million and $10 million used to purchase Bitcoin. Following them are the retail investors, represented by the orange line. We can see that its growth is also very dynamic, and it has basically been sustained since last week. In addition, the green wallets are also rising slightly, and green wallets are those with a balance between $1,000 and $10,000 used to purchase Bitcoin again. The second largest wallets, that is, the purple ones, are currently not interested in the market. Ethereum is looking a bit more negative than it did last week. Last week, I mainly talked about the potential for Ethereum to move toward a new ATH, but as we can see in the short term, unfortunately, things look a bit different. In the long term, I still see a lot of potential here, but at the moment, we can see that the chart structure is strongly bearish. Additionally, this wick, for example, due to the information that has appeared on the market in the last 24 hours, could be filled. As a result, the price here could move toward $3,500. Will $3,500 be reached? There is no guarantee of that. However, it's worth noting that the 200-day moving average is heading toward this level, so there will be potential double support here. If you're getting ready to buy, remember this is not investment advice, but I will definitely be placing my buy orders somewhere around these levels. 3.5, maybe even lower, although I expect that the price could bounce from a higher level as well. Currently, we can also see that the 100-day moving average for Ethereum is acting as resistance. Previously, it was the 50-day that served as resistance. Let's see how the price is basically stepping down in stages. First, the 50-day broken, then drops down below the 100-day. The 100-day gets tested, and again, we go a bit lower. So the $3,500 level is justified for potential purchases. It's worth noting that on the RSI, we currently don't see any divergence here. We did have a divergence a little earlier. It occurred here, and it was, of course, a bullish divergence, situated at a very important point, essentially. And this divergence, even though a significant amount of time has already passed since it first appeared on the chart, can still, in certain circumstances, result in the price being pushed somewhat higher than it otherwise might have been. At the moment, however, after careful consideration, I don't see this particular divergence as a key or decisive factor influencing the current market situation. It is important to keep monitoring, but for now, its impact seems limited. I'm mainly looking at the chart structure and watching the $3,500 level and what will happen around that price. Before Ethereum reaches $3,500, if it even gets there at all, it's worth checking fire charts because they indicate that there is some support between the current price and that level, specifically at 3,750. And we can see it right here, and the volumes present here amount to just under $20 million set aside to buy Ethereum during any turbulence, and there are quite a few people interested in buying. What we see above all is the orange line, which represents retail investors who have been on an upward trajectory for a very long time. In addition, whales have also been on an upward trajectory represented by our brown line, which I'm highlighting now because it tends to fade into the background compared to the others. However, for the past 24 hours, whales have actually been on a downward trajectory, which may be short-term, but it's worth noting that at the moment they are not buying. The purple line, which represents the second largest wallets as well as the others, are behaving in a very similar way. So currently, Ethereum is being bought only by retail investors. Nevertheless, there is strong support at 3,750, and it was actually established there just a few hours ago, so purchases will definitely take place here. Time for an altcoin, and your pick for today is Link. Link, which by the way is really playing out the technical analysis very nicely. Above all, this highlights that technical analysis works. Let's take a look at what's happening around the moving averages here. We see drops below the 50, a beautiful bounce off the 100, another nice bounce off the 50, more declines, and currently, Link is trying to hold the 200-day moving average. Everything is playing out on the moving averages. Yes, the algorithms are working here. They refer to mathematical, countable elements, and moving averages are simply countable, which is why this type of trading applies here. Now, we see another very interesting thing on Link when we turn on the RSI, and that is, of course, a bullish divergence. A bullish divergence that unfolds in this way, which has already pushed the price a bit higher, but still definitely below certain expectations. We can see that here, there was a decline and an attempt to defend the 200-day moving average. What could happen next with Link? If you're looking for buying opportunities here, and I think there are some with Link, it's worth considering whether the wick of this candle here, just like with Ethereum, might get filled. So a drop to around $15 is possible. As for potential upward movement, or actually the second line of support, maybe let's start with that. That would be this gray box, which has long served as a support level that we've highlighted many times before. TD sequential isn't giving us any signals of a possible trend reversal, so a further deepening of this move makes perfect sense. But are declines down to this gray box highly likely? In my opinion, no, because on Link, I can see, for example, thanks to the RSI, a slightly higher momentum that could push this cryptocurrency back, attention to the moving averages. So if you want to trade from range to range, and if Link starts to rise, selling around the moving averages, whether it's the 50 or the 100-day moving average, which by the way are currently correlated, makes perfect sense. That's at least what I will be doing, but please note, this is not investment advice. However, when checking FIRE, we can now see from the chart that there is a much higher probability of a decline first, and only then a possible breakout upwards. So we can keep 50 and 100 as potential selling points in mind, but be aware that they are unlikely to be reached as the first scenario. It is more likely that Link will experience declines here, and this is evident from the data. On the CVD, we observe a lack of buyer interest, at least in the last 24 hours. We can relatively compare this to what happened a few days ago when accumulation actually took place. Currently, these lines are completely flat. Besides that, let's take a look at the FIRE charts themselves, and here we can see where we might expect potential support levels. The first ones appear around $16 and then at $15, which is precisely the depth reached by the last wick. From the lowest local candle, that's exactly where buy orders are appearing, so a rebound from that level and placing buy orders there, in my opinion, is fully justified. And in search of a breath of optimism, it's worth looking at the spot Bitcoin ETF in the United States, and here we have a chart illustrating this market, and we can see that yesterday, on Tuesday, there were very large purchases, and these are purchases that often exceed the sales that have taken place in recent days. But a word of caution, because let's also remember that there was an update regarding the CEU sanctions imposed by the United States on China, which was most likely published after the ETFs had essentially already closed. As a result, there were certainly some sell-offs here, but they weren't strong enough for this bar to turn red. That's why we approach this chart with caution. We can see that there is a certain optimism that at least the information being released to the market is timed for theoretically safe moments so as not to disturb the market in any way. However, it's still important to remember that this is a green candle, and after this green candle, once the market calms down, more may appear. This is a chart that really needs to be watched closely because a lot is currently happening around it. Since Bitcoin is currently at a very important decision point determining whether we will be in a bear or bull market, especially when looking through the lens of the 350-day moving average, it's worth paying attention to exactly who is accumulating Bitcoins at this moment. So we'll review wallets from the smallest to the largest. To start, we'll focus on those wallets that have any Satoshis in their balance. Here we can notice, let me narrow down our area a bit, and we see that these smallest wallets are continuously accumulating. Here we are experiencing a certain flattening in recent days, but the overall trend is still upward. So if someone tells me that retail investors are entering the market, I'll have to say, sorry, but this chart actually shows something completely different. They are entering, but the pace of their entry is simply different than it was before. Besides that, let's check wallets with a balance of at least 1 Bitcoin or more. And here we can see that we have a long-term downward trajectory, and currently, despite these deep declines, there is a flattening. So here as well, there may already be exhaustion from selling. We will definitely keep an eye on this chart in the future. Besides that, it's worth paying attention to what's happening with wallets holding 1,000 Bitcoins or more. Here, along with the recent declines, there was indeed a breakdown, and currently we are seeing a slight rebound. This chart moves more or less in line with the current price of Bitcoin. And here's the chart for the largest so-called whale wallets, meaning those holding 10,000 Bitcoins or more. Here we can see that the recent drops in Bitcoin have basically changed very little in the number of whales. But right after those drops, let me move it again, right after them, there was a sharp rebound. And we can see that this rebound essentially resulted in an increase from 83 a few days ago to 87 today. So we've gained a solid 4 wallets that each hold at least 10,000 Bitcoins. And this looks, in my opinion, quite optimistic. And the last on-chain chart, which is the Bitcoin balance on exchanges, this is a chart we've been referencing quite regularly lately. We've said in recent days that we're on a downward trajectory, and despite the fact that the price is also falling, the amount of Bitcoin on exchanges is decreasing. The last few days have indeed resulted in a bit of a rebound, but as we can see, this rebound is not significant in the context of the overall chart structure. Therefore, the declines in the Bitcoin chart may actually be coming to an end, at least from the perspective of this chart, since we don't see any inflows. I'm also aware that this chart, the Bitcoin balance on exchanges, differs from the one Sławek Zawadzki presented to you during the last quarter with Kanga. However, it's important to note that here in this chart, I'm only taking into account the largest cryptocurrency exchanges in the world. That is, those that generate the highest volumes and have the greatest potential to push the price down or drive it up. So from this perspective, thanks to this chart, I can see that for now, everything is okay. In a short summary of last week's competition, the winner of which is Krzysiek Suj, who analyzed Bitcoin. Very nice comment, Krzysiek. Please contact support to collect your winnings. That's all for today. Leave any kind of feedback if you enjoyed it, and please rate this episode on a scale from 1 to 888, where 1 means it was weak and bland, I don't want to see more, and 888 means it was pretty cool. See you next time. Bye.